Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And today is October 9 and we're starting from euro-dollar pair with Andrei Shevchenko. He's got a trading plan according to the stop hunting and price action strategies. EUR-USD rose and closed Friday with a confident increase in quotes after the release of the US unemployment data. However, during the weekend, a conflict occurred in the Middle East, causing the pair to decline. Today's Asian session opened with it trading below the Friday's close, and it continued to crash at the start of the European session. This situation could be used to open long positions in the pair. Looking at the three-wave pattern: A, B, C, where wave A represents the previous upward movement after NFP. Traders could consider long positions with stop loss set at 1.0490. Please take profit on the breakdown of 1.0617, 1.0674, and 1.0737. The next stage of our review is the next major, GBP-USD, presented by Dean Leo. The GBP-USD pair has almost reached the level of 1.2270, which is the local high of the previous correction. The volume of short positions decreased at this mark, which led to a slowdown in the corrective phase. On the 4-hour chart, the RSI indicator is moving in the upper area of the 50-70, which corresponds to the correction. On the same chart, the alligator's MAs are headed upwards, which reflects the quote's movement. In order to extend the corrective phase, the price must consolidate above this level of 1.2270. In this case, the price will gradually rise towards 1.2350. The bearish scenario will come into play if the price returns below the level of 1.2100. In this case, traders might consider updating the local low with the lower area of the psychological level of 1.1950, 1.2000, acting as support. Complex indicator analysis indicates a corrective phase in the short term and intraday periods. Meanwhile, in the mid-term period, the indicators are reflecting a downward cycle. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Rikimovic. Gold has been trading upside this morning, and we found gap up through the consolidation high, which is a sign that buyers are in control. Anyway, there is the key resistance zone 1857-1862, which will be critical for the gold direction. In case of a breakout of the resistance at 1860 and hold above, there is the chance for the higher prices towards 1878. In case of the rejection of the resistance zone, there is the chance for the gap fill and potential test of 1833. And finally, here's Laurie Bailey with USD JPY pair focused. Let's have a look. Ignoring the short-term price dip caused by the Bank of Japan's intervention, the yen is consolidating within the range of 148.50 to 150.00. The persistent downward movement of the Marlin oscillator since the second half of August indicates that the price practically doesn't have a chance to break above the consolidation. Although, for purely speculative reasons, the price may temporarily break above the critical level of 150.00, which the central bank defended. It would only be for middle players to trigger stop-loss orders. The upper limit for growth is the price channel line around 150.40. If the price consolidates below the MACD indicator line, 147.46, a false breakout to the upside is unlikely. The first target for the decline is 145.90. However, there are two supports on the path to the MACD line. The September 29th low at 148.50 and the price channel line at 148.04. On the 4-hour chart, the price has stalled below the balance and the MACD indicator line. Marlin is already in the growth territory and is trying to assist the price in overcoming this resistance. The attempt will likely succeed, but the growth is expected to be short-lived. That's all for today. See you online soon and good luck.